Well, with more than $1 trillion on the line, investors are counting on Bob Doll's predictions to come true. BlackRock's vice chairman and the global CIO of equities made 10 bold calls at the start of the year. Now we're midway through the year, so it is time for an update. Hey, Bob, it's great to see you this morning.
Good morning, Becky.
We were just talking about this. This is a good day to have you on. We've got a lot of people who have been watching what happened yesterday. They're watching oil prices continue to climb, watching the stock market at its lowest level in 21 months. What do you think is going to happen? At the beginning of the year, you said you thought that equities would grind higher. Do you still think that's going to be the case?
Yeah, we still think that's the case for the second half. One of our predictions was that we would see a new high. I think we're going to eat some crow on that one, Becky. But we think that, as we said in mid-March, we think that was the low. The S&P 500 got to 1257. We're, a couple percent away, so this is test time. We also said we didn't think it'd be a V bottom. The fact that we went from 1250, call it, to 1450 in the S&P in 2 short months really surprised us. That we've pulled back, no surprise at all. We still have inflation problems, slowing growth, the credit issues, the litany, and therefore stocks can only grind higher. It's going to be a difficult environment, we think.
Bob, we were just talking about this a minute ago. Joe brought up the call where you said this is the bottom, though. I mean, you're really ready to say, okay, that's still definitely the bottom. Things have gotten better. The credit crunch is behind us?
The worst of the credit crunch is behind us. Some things have gotten better, and markets anticipate. Markets make bottoms before all the fundamentals do. We know that. This is obviously a test time. We may get some more tests along the way, but we believe that all that happened, the Fed opening the window, the crisis in confidence, all the measures of bullishness, bearishness, cash on the sidelines, a lot of that pointed to a pretty important bottom in March, we think.
Could oil prices be the things that really kind of throw a snafu into everything?
Well, there's no question. Oil just, as the global economy slows, oil prices keep going up, and that is certainly a monkey wrench in here. I think a catalyst or maybe a necessary ingredient for stocks to grind higher is some better behavior from oil, that it at least goes sidewise for a while. This now move above 140 certainly is not helping. Has got a lot of people very worried.
Bob, another one of your predictions is that the dollar would rise against the euro but fall against some of the developing market countries. You still stand firm in that belief for the overall case for the year?
We still think that's the case. European economy is slowing. We have a very different policy response here in this country. Pretty aggressive monetary and fiscal policy. In Europe, I would say pretty stubborn monetary and fiscal policy. And therefore, I think we have some ingredients in this country for some better news on the currency, at least relative to the troubled euro and the expensive euro.
Bob, philosophically, what do you think goes into the dynamics of a bubble? I was talking to we were talking to the CEO of the CME about speculation, which seems to be a word that if you're in that business, you can't even admit the possibility of it. It seems like, I guess because it brings up the notion of regulation, or I'm not really sure why. They almost philosophically say that on any given day, if a futures contract is trading somewhere, that reflects the current supply and demand dynamics, and it's sort of moot to even talk about whether it's a bubble or not. But we know in the past that when gold was at $800 25 years ago, what happened on that day when it was trading at $800 in terms of supply and demand? Wasn't that speculation and a bubble? Wasn't the NASDAQ at 5,000? It's not to say it's manipulated, but isn't there speculation that can go into these markets that don't warrant these prices?
Of course, that's the case, Joe, as you well know from the historical examples you just drew. We all know that fear and greed makes tops and bottoms. And when we look at NASDAQ 5,000, that was a time when everybody thought this time is different. Trees do grow to the sky. And you never know on the day, but you look back and you say, yep, everybody was bullish, nobody was bearish, and that marked a high.
Was it speculation, Bob? Wouldn't you call that speculation? A lot of money chasing, a finite amount of securities that were involved in the internet, so it goes to those levels. But the actual inherent value of those assets wasn't anywhere near 5,000 on the NASDAQ.
That's absolutely accurate, but I think it's also true that it was supply and demand. People wanted to buy those stocks. Nobody wanted to sell them, and that's what got the thing to 5,000. So I think the two do go hand in hand. Markets we know are a lot more volatile than the real world. And as a result of that, you get these inordinate highs and inordinate lows, which create buying and selling opportunities.
If you've got a lot of people with a lot of money that want to buy futures contracts in energy, and it's more money than we've ever thought of because it's pension plans, it's ETFs, it's all these things. Couldn't that be pure supply and demand for futures contracts because there's a finite number of guys on the other side of the trade? So can't the same thing happen, or is that impossible?
Of course it can, Joe. We know commodities are very volatile sorts of things, and oil's the one we're talking about now. And it's clear that there are a lot of demand out there from pension funds and the like pushing the price up. Nobody seems to want to take the other side of it. Now, I think the supply and demand, when you look at growth in the use of oil, particularly outside the United States, and you look at the supply of it, I think that's supportive also of the fundamental argument of oil at 140. Now, with the global economy slowing, at some point in time, I think the oil price has to cry uncle.
It seems like a move from 25 to 140 takes into account the change in the world's thirst for oil to some extent, right? I mean, if you go from 30,
that has to be true.
If you go from 30 to 140, there's some China already in there, right?
Here. I don't disagree. I think if most people knew the economy of the globe was slowing the way it is, and that oil started the year at 90 or wherever it was, that it would go to 140 with the globe slowing would be a dichotomy, and that's a little bit of what's going on. Short term, it may be ahead of itself, I would argue.
Hey, Bob, you have talked about financials for quite a while, and you have been hesitant. You've said every time these stocks drop, just because they're cheaper doesn't mean this is a value proposition. You've been right on that call so far, and in fact, now there are questions being asked about Merrill Lynch. Whether it will need to raise more cash. The Journal points out today that Thane has said in the past that it could do a couple of things. It could sell its 20% stake in Bloomberg or its 49% stake in BlackRock. You start hearing things like that. What does this tell us about the financials in general?
Well, I think, as we've said all along, Becky, lots of financial companies need more capital. And as they get that capital, it dilutes the existing shareholders, and that's part of the reason we've been underweight that sector. We don't think the dust has settled on the financial sector. At some point we'll get there, but a lot of people saying they're cheap. Yes, they may be cheap relative to yesterday's earnings model, but today and tomorrow's, we think there's a new model that we don't yet quite figure out. So still a little bit too early.
Still a little too early, so wait and see what happens.
I think that's right on the financials, Becky.
Okay, and Bob, just overall, again, your prediction for the year is the markets will continue to move higher. People shouldn't necessarily panic just yet.
I think that's right. Look, we've been in this 1250 to 1450 S&P 500 trading range. We're at the lower end. If we're right that we're in the area of the bottom, we think we grind higher. And as we were in the middle of May at 1450, I think we can get there again.
Bob, at least you're out of Merrill.
Yeah,
can you believe it? Would you have ever believed that stock would be where it is right now?
No, hard to believe that the whole financial sector, including Merrill, certainly has struggled as a result of the credit problem.
Tough subject for you, but that BlackRock's a heck of a firm. Yeah, but it's a different firm now. Bob made the right move.
Hey, Bob, great to see you. Thank you for joining us.
Have a great weekend. Thanks, guys.
You too. Talk to you soon.